And thousands of us tonight are on the broad road that leads to destruction. And tonight, I would say with Moses, I would say with Joshua, turn, repent, choose God, serve Him, live for Him. That is the message of God tonight to this great audience of people at Yankee Stadium.
I see revival coming to planet Earth, maybe as never before. It would be untold numbers, an untold, uncounted multitudes that will be saved. The dead will be raised. The arthritic will be healed. Cancer will be healed. No disease would be able to stand before God's people, and that it would be a worldwide situation.
There's a church that doesn't just know about God, they know God. They don't just believe in His power, they carry His power. God will shake the United States of America one last time, not by might, not by power, but by my Spirit.
Welcome to Pittsburgh, Pennsylvania, as Adalis and I are here to announce our next big move, biggest move we've ever made for Revival Today. Behind me is a building that will look nothing like it looks right now when we finish. We're on just under 5 acres of property that we've just finished purchasing, which is going to give us the ability to have a state-of-the-art studio. And in that studio, something I've wanted to have for a long time, which is a live studio audience. It's going to be a 500-seat building when we finish with it that'll give us the ability to touch the world with our broadcasts. This facility is going to give me the ability to do what I've really missed, which is having you in the audience to minister to personally. Obviously, you can't beat the reach of digital media. We touch the whole world every day. But we have the ability now with this to lay hands on people, pray for people that are sick, a place where you can bring people that are drug addicted, demonized, and really give them the ministry that you can't get on YouTube and Facebook. I can't wait. And then beyond that, we're going to announce the launch of Revival Today Church. We're going to hold Holy Ghost church services every Sunday morning. I'll be there most Sunday mornings. This isn't going to be like some little side project. We're going to give you and your family a place you can go that's a soul-winning church that values the presence of God, where you can get prayed for and ministered to, where there's not a critical race theory lecture or a mask and social distancing 10 minutes of no talking to anybody in the lobby. None of that. We're going to have a place where you're free and where you're free to experience the presence of God.
I'm incredibly excited because I know a lot of you have been asking about different meetings and events that we couldn't have during COVID, and trust me, we tried so hard. So this really frees us up to do everything that we want to do with healing meetings and women's conferences. So I am so looking forward to seeing you and having you be a part of this.
So I want to give you a twofold call to action. Number one, if your church turned in to a liberal nightmare in 2020 and you need a place to go, I would be happy to have you at our church. Number two, if you are a partner or a friend of our ministry, Revival Today, this is the biggest move by far we've ever made. By the time we finish remodeling that building, the acquiring of the property, you're looking at a couple of M's. So if you would stand with us now, I'll say thank you ahead of time. Pray and ask the Holy Ghost what He would have you to do. You've been so generous, and I thank you ahead of time for your extreme generosity. I know I speak on behalf of my wife, everybody here at Revival Today, when I say we love you very much. And now I can say I look forward to seeing you face to face here at the new home of Revival Today.
Hey. Hey, Toby, you suck!
Good morning, everybody. Welcome to Check the Market. Today, Friday. How's everyone doing? Good morning, Naveed, Christophorus, Patrick from Perryville, Maryland, Adrian, D&D Investments, Melody, Numanized, Sarah. That's a great testimony. We celebrate with you. That's awesome. Make sure you share the broadcast. I don't think anybody can go to Mars either. But we'll see. NASA has some plans and we'll find out what they are today. Here on Check the Market. Good morning, Cammie, Michael. Absolutely. Go XRP and ADA. Let me actually take a look here, see what's going on. Oh, the market's open already too. I completely missed it. Dow Jones is up, Nasdaq's down, S&P is up. Disney shares are up. They had a good earnings beat yesterday. Bitcoin, yep. Bitcoin's up. Bitcoin doing good. I saw that this morning. They were rallying. Let's take a look here. See where it's at. Ooh, wow. 46.5. Doge is at 20, almost 28. Ethereum 32, 3200. Let's take a look at XRP. XRP back over $1. Awesome. XLM 35 cents. Doing good. ADA over $2. What a great day. All right, let's get into it this morning. Make sure you share the broadcast as we embark on our quest to put Fox News, Fox Business, and CNBC out of business. Bloomberg.
Oh, yeah.
That's right. All right, let's see the first article. Nikola founder post-indictment share sales reach 153 million. Man, this guy sold 70 million, 100 million, however many shares. Let's take a look at the article.
You must be new or something, man. We the best, man.
Nikola core founder sold more than $76 million of shares in another round of disposals after he was charged with securities fraud, bringing his total divestment to more than $153 million. Former executive chairman Trevor Milton offloaded more than 7.5 million shares, the second such series of transactions since he pleaded not guilty late months to misleading investors about Nikola. He and his spouse still own some 64.6 million shares according to securities filing. Milton was charged by prosecutors on July 29th with making false statements about the electric vehicle startup to boost its stock. I'm down 56%. This is the worst performing stock I've had this year. The U.S. Justice Department and Securities and Exchange Commission have alleged he deceived investors to enrich himself. Good morning, Charles. Thank you. That is like the greatest compliment ever. The Stuart Varney of Revival today. I appreciate that. I'm going to start working on my British accent too. Let's see. All right, let's keep going. That's it. All right, cool. Adidas, depending on where you're from, ends Reebok era with $2.5 billion sale to Authentic Brands. Authentic Brands, I think that's the one that Shaq owns, or is a part owner of, I think. Let me take a look. Yep, Authentic Brands Group. Oh, I guess Shaquille O'Neal was actually the one who pushed them to do this. So Adidas is selling Reebok to Authentic Brands, of which Shaq is a co-owner. Let's see the article. Adidas is selling Reebok to Authentic Brands Group for up to 2.1 billion euros as the German sporting goods company concentrates on its core brand after a deal that did not deliver. Adidas bought Reebok, or Adidas, for $3.8 billion in 2006. Ooh, they made a loss on it. To help compete with arch rival Nike, but its sluggish performance prompted repeated calls from investors to sell the US and Canada-focused brand. In the meantime, Adidas managed to eat into Nike's dominance in the United States with its own brand, helped by partnership with celebrities like Kanye West, Beyonce, and Pharrell Williams. Reebok will keep its headquarters in Boston and continue operations in North America, Latin America, Asia Pacific, Europe, and Russia. The U.S. brand management firm said in a statement, adding it will work closely with Adidas during the transaction. Over 11 years, ABG has amassed more than 30 labels sold in some 6,000 stores. Its brands include apparel chains Aeropostale, Forever 21, as well as the Sports Illustrated magazine. And I believe they are not public yet, but there were talks about them taking the company public at some point. Good morning, Sandra and Alex G. Good morning from Southern California. We're checking the market, so we're looking at economics, finance, cryptocurrency, stocks, things like that. All right, let's see the next article. Student loans, FOIA, data reveals tons of underwater borrowers ahead of repayment cliff. See the article? Federal data reveals that despite the interest-free payment pause allowing borrowers to find some breathing room during the pandemic, 2/3 of nearly 430,000 student loan borrowers were still underwater, meaning that they still haven't been able to make a dent on their original balance. The data obtained from the Education Department by the Center for Responsible Lending and the National Consumer Law Center through a Freedom of Information Act request and provided to Yahoo Finance looked specifically at data of borrowers with federally backed debt services by Navient, who had decided to make at least one payment during this pause. There's often been a lot of talk about student debt and assuming that the problem is simply that college is too expensive, Abby Shafroth, an attorney at the NCLC, told Yahoo Finance. And while that's certainly a problem, this data reflects that while borrowers are in repayment, even though they are making payments, they are experiencing a debt burden that goes beyond the original cost of college. They are finding themselves underwater. It's because they're charging too high interest rates. I couldn't get that word out. Continue. Absorbent. All right, whatever. Let's keep moving. Leaving borrowers stuck attacking interest for years while not making a single dent on their principal loan. Shafroth stressed is both the department's interest accrual and the capitalization policies and likely servicer issues. Federal actions amid the pandemic will lead to roughly $100 billion in total student loan forgiveness between March 20 and September 21. According to Education Department data and analysis from experts providing a financial lifeline to the roughly 45 million student loan borrowers owing more than $1.7 trillion in outstanding federally backed debt. The pause is scheduled. My goodness, so it's almost double. I remember I was already living here in the United States. It was after college, I think, when it was after I graduated, when it had hit the $1 trillion mark, and that was like a huge deal. And now it's almost at 2 trillion. Man, that was quick. The new data revealed that 428,000 borrowers who owe almost 28 billion in federally backed student loan debt were being serviced by Navient at the time, though the exact data of when the data was pulled is unclear. All right, continue. Yeah, those are absurdly amounts, absolutely. But it's something that could cause an issue for markets, because a lot of these, if people can't make their federally backed loans, how are they going to make the private backed loans too? That's something that we're going to have to keep an eye on, especially if there's a market downturn. That could cause some issues. $1.7 trillion in student loans. The Fed to unveil bond buying taper plan next month. Jobless rate to fall slowly. Reuters poll. So this is a poll by Reuters. Let's see the article. The Federal Reserve will announce a plan to taper its asset purchases in September, according to a solid majority of economists polled by Reuters, who also said the U.S. jobless rate would remain above its pre-pandemic level for at least a year. Since the release last week of a strong U.S. jobs report, which showed an unexpectedly sharp drop in the unemployment rate to 5.4% in July, a flurry of Fed officials have suggested the U.S. central bank may start reducing its $120 billion in monthly purchases of treasuries and mortgage-backed securities sooner rather than later. Nearly two-thirds of respondents, 28 of 43, said the Fed is likely to announce a taper of its asset purchases, currently set at $80 billion of treasuries and $40 billion of MBS per month, at its September meeting. But while that timing has become more likely in the minds of many Fed watchers over the past month, it's by no means a done deal for all of them. I know some Fed officials are pushing for it to happen at the September meeting, but that's very unlikely, said Jim O'Sullivan. So it could be that in September, the Fed is going to start tapering after their meeting then. Continue. November if possible, if the next two employment reports are strong enough, but the odds favor December. I guess December then. Nearly 60% of respondents said they expect the Fed to start the reduction of its asset purchases in the first quarter next year. Nearly all of the rest said it would happen in the fourth quarter of 21. The poll concluded the Fed will start with monthly reductions of $10 billion in its purchases of treasuries and $5 billion in those of MBS. Some responses were as high as $20 billion for both treasuries and MBS. So we'll see what happens there. That could definitely cause a scare in the market, because every time the Fed isn't pumping money into the market, liquidity into the market, Wall Street freaks out for some reason. Next. Never trade with your entire account. Me to me. Go all in. I have those conversations frequently with myself. You know what? Why don't you just break your own rules and just put everything in this one time? But there have been a lot of times where that didn't go so well for me, so I got to stick to my rules. Continue. Virgin Galactic share fall after Richard Branson dumps another huge stake worth $300 million. No! Yeah, for real. Continue. Virgin Galactic founder Sir Richard Branson sold more of his ownership of the space tourism company this week, dumping another huge stake to fund his other ventures. Branson, through his Virgin Investments Group, sold 10.4 million shares of Virgin Galactic this week at various prices, ranging between $25.75 a share and $34.39 a share, according to an SEC filing. The stake was worth $300 million in total, according to Insider Score. Shares of Virgin Galactic fell 3% pre-market trading Friday from its previous close of $25.94 a share. I can't believe this. If you believe in your company, you got to stay in it. Let me take a look where it's at right now. Oh, it's back up a little bit, 25.65, so it's only down 1% for the day. Not too bad. A Virgin Group statement said that Branson's parent company intends to use the net proceeds from the sale to support its portfolio of global leisure, holiday and travel businesses that continue to be affected by the impact of the COVID-19 pandemic, in addition to supporting the development and growth of new and existing businesses. So Branson is divesting from Virgin Galactic, and yeah, I mean, if you believe in your company that much, why would you sell it? I would stay in it for sure. Continue. The Virgin Group continues to be the single largest shareholder in Virgin Galactic. The stake sale is Branson's third since taking Virgin Galactic public through an SPAC in 2019, with his earlier sales worth $504 million and $150 million in May 2020 and April 21, respectively. Branson has recouped more than $950 million of his investment in the space company through stake sales since taking it public. Virgin Galactic raised over $1 billion in investment before going public, according to an SEC filing. Continue. This bad boy, absolutely. I was driving by a dealership on Sunday here in Washington, Pennsylvania. And I decided to stop because they had like a whole bunch of cars on the lot. But when I stepped onto the lot, I saw that every single vehicle that they had on the lot didn't have like a sticker in it. I'm like, man, what's going on? And then I realized and noticed that every single one of those cars was a loaner car. So they have hardly any inventory to put out in front of their store. So what they do on the weekends to make it look like the dealership has inventory is they stick all their loaner cars out there. I'm sure they would sell the loaner cars, but that was odd to me. How there's such little inventory that they're putting their loaner cars out there to make it look like there's inventory. Next. Markets no longer fear inflation and stocks will continue to rally, HSBC says. So HSBC and Citi are on the opposite end of the spectrum here when it comes to this. London. Markets no longer fear inflation and are now focused on the spread of the Delta variant, according to HSBC Wealth Management. In a note Thursday, Chief Investment Officer Chan said that after a period of concern about persistent higher inflation, with investors assessing whether the U.S. Federal Reserve may be forced to tighten monetary policy, markets appear to have gotten used to the concept. Chan pointed out that while U.S. consumer price inflation remained high at an annual 5.4% in July, 10-year U.S. Treasury yield has declined, indicating that markets have nothing to fear but fear itself when it comes to inflation. Continue. Meanwhile, the S&P 500 notched a record high on Thursday, and probably again today. Let's take a look, see where we're at here. Yep, the S&P 500 is up again today. The Philadelphia Fed's ongoing survey of forecasters indicates that consensus expectations are for inflation to run at 2.4 over the next 5 years. Even when analyzing stock market volatility upon closer inspection, the S&P 500 has still pushed higher month on month since January, despite concerns around inflation. Even May and June, when inflation fear were highest, delivered positive returns, adding that all this suggests financial markets are no longer afraid of higher inflation. Sheehan noted that this does not necessarily mean investors will not get spooked by messaging on the Fed's intentions. Yeah, absolutely, they'll get spooked because there's no more easy money coming into the system. Continue. Good morning, Bob and Linda and Jesse. Welcome. Arguably, markets are now more focused on the state of play regarding COVID, in particular the spread of the Delta variant. But regardless where you look, the general view is the broad success of whatever. Continue. It is on this base case that HSBC is still investing in equities, particularly in sectors directly exposed to consumers, such as consumer discretionary, financials, and real estate. However, he cautioned investors that volatility may still pop up periodically. But it doesn't look to me like they're investing in equities, but they're investing in consumer discretionary, financials, and real estate, which are traditionally more defensive sectors. So it looks like they're also, even though they're saying something, it looks like they are being more defensive if they're investing in consumer discretionary, financials, and real estate. Interesting. All right, next. Me getting rich off crypto, the government with their 43% capital gains tax. Continue. Disney beats expectations across the board with U.S. parks returning to profit. I did not expect this. I thought for sure that Disney was going to be trading lower. Because even though there would be an earnings beat from, compared to last year, I didn't think that they were going to do this good. The stock is up 5% this week. It's up 3% today, 3.6%. Disney reported a blowout fiscal third quarter earnings. Third quarter? Second quarter. After the bell Thursday, beating Wall Street expectations on definitely second quarter. On subscriber growth, revenue, and earnings, the company's shares were up more than 5% in after-hour trading. Earnings per share 80 cents versus 55% expected, and revenue $17.02 billion versus $16.76 billion expected. Continue. The company beat on subscriber estimates for Disney Plus, coming in at 116 million. Street account estimated the company to report 114.5 million subscribers for its third quarter. How are they already? Oh, they might be in a different fiscal, fiscal cycle. The segment had 103.6 billion in its fiscal second quarter. So that's it. It's the fiscal third quarter, not the third quarter of the year. Average monthly revenue per subscriber for Disney Plus dipped 10% year over year to $4.16. The company attributed the drop to a higher mix of Disney Plus Hotstar subscriber compared with the prior year quarter. So Disney doing well. I'm surprised they're up, because I'm sure that their guidance must not have been 100% positive, but Disney is one of those favorite stocks. Next. Good morning, Ninja Buddha. AMC says it'll accept Bitcoin as payment for movie tickets by year end. AMC accept Bitcoin, one person. AMC accepts Dogecoin. So that's how you fill out your theaters, if you accept Dogecoin. Next. Morning, Eric. NASA, here we go. NASA wants you to live on Mars. NASA wants to pay you to live in a Mars simulation for a year. Let's see the article. Last Friday, NASA announced that it is looking to hire 4 people to participate in a year-long program at the Johnson Space Center in Houston. Selected crew members will live together in a 1,700 square foot facility meant to simulate the experience of living on Mars. Isolation, limited access to resources, and lots of space food. The qualifications are hefty and fairly similar to some of NASA's actual astronaut requirements. You need to be a U.S. citizen or permanent resident, a non-smoker between the ages of 30 and 55, and have a master's degree in a STEM field, among other requirements. Applications close on September 17th for a program set to start in the fall 2022. So if you're watching and you have a master's degree in STEM, you're a non-smoker, you're between the ages of 30 and 55, you can apply to live on Mars, in quotations, for a whole year. Look at that. Selected applicants will use virtual reality to stimulate real missions, from participating in spacewalks to workshopping solutions for potential mid-mission problems. This sounds like a year-long summer camp, space summer camp. The proactive activities, which will also include growing crops in a Mars-like environment, are partially intended to keep participants engaged and productive while living in isolation for an extended period of time. So there will be no Netflix and no Hulu, Amazon Prime. Nick's not interested. No Call of Duty, no Xbox of any kind. Next. Home prices jumped across the U.S. in second quarter. The National Association of Realtors numbers show supply of existing homes for sale can't keep up with demand. See the article? Home prices surged in almost every corner of the U.S. in the second quarter. That is true. You could have DVDs if they have a TV. If they give you enough ration of electricity. Because I'm sure you're going to need to have like your solar batteries all charged up. No online Target orders. I don't believe they deliver to Mars. I mean, I guess they could revolt and go to war. I'm sure they'll have some sort of like... It would be interesting if they streamed it. If NASA did like a 24-hour live stream and you could watch, you know, what exactly goes on. Like a new reality TV series. Living on Mars or something like that. Real Housewives of Mars. I'm not sure if the vaccine is required. I don't think you can bring your own like DVD player and stuff like that because they'll yeah, that is how horror movies start. That is true. Mars becomes their own entity. I'm sure you could see them, you could watch them, you know, plan on the 24-hour live stream of how they're going to take over Earth and everything. Yeah, I think it would be pretty fun. NASA should look into live streaming this. While the home buying frenzy has shown signs of a slowdown in recent months, home price growth has yet to cool. The median sales price for single-family existing homes was higher in the second quarter compared with a year ago for 182 of the 183 metro areas tracked by National Association of Realtors. The association said Thursday, in 94% of those metro areas, median prices rose by more than 10% from a year earlier. Nationwide, the median single-family existing home sales price rose 22.9% in the second quarter to $357,900 from a year ago, a record in data going back to 1968. Home prices have climbed the past year as low interest rates and increased remote work spurred new home buying demand. At the same time, the inventory of homes on the market has dropped as potential sellers canceled or delayed their plans to move. The homes that do hit the market sell quickly, often after a bidding war. So there you have it. It's gone up even more. Let's see the next article. That is true. If they have like a live chat, if they do like a Twitch or you know, streaming on YouTube or something, there would be some serious trolling going on. They would have to hire another person as a full-time job just to make sure that the live chat doesn't get out of control. All right, next. Amazon workers after Jeff Bezos goes to space. Oh man, that's horrible. The housing market is so hot, a burnt-out Bay Area home is drawing cash bids above $850,000. I'm beginning to get serious, like, flashbacks to 2008. $850,000 for a burnt-out home. I guess they're just buying it for the land. The listing warns that it's more than a fixer, but a sale is still pending after just 6 days on the market. Let's see the article. The housing market is supposed to be on fire right now, but this might get a little too literal. Offers are pouring in an above listing price for an $850,000 burnt out house in the San Francisco Bay Area. Sure, many home buyers are looking for a place that they can really put their stamp on and make their own. After all, a major appeal of homeownership is being able to do whatever you want with the property. Well, this bare bones opportunity to renovate / rebuild / restore in Walnut Creek, California is advertising just that. The 4-bedroom, 2,300, almost 2,400 square foot house was scorched in a 2-alarm fire last fall and has been listed at $850,000 and is still drawing plenty of bids despite the damage. Continue. There you have it. That is a little more than a fixer-upper right there. Continue. Listing agent Melinda Byrne with Key Realty told MarketWatch that 8 offers came in less than 3 days. By the time I marked it pending, I had 5 other people wanting to write offers, and I'm still getting people who would like to write on it to be in a backup position, which kind of tells you that what our market is like out here. Continued adding that she expects the pending sale to close Monday at significantly above our list price. It had to be an all-cash offer because there's no lenders that are going to lend on it in this condition. Extensive damage from a fire that has stripped to the studs on both floors. Bring your contractor, architect, and designer. More than a fixer, and the potential is limited only by imagination. So there you have it. A burnt out house in San Francisco for over $850,000. Continue. And next. A farewell to card swipes. MasterCard to start phasing out magnetic stripes in 2024. After gradual relaxation of issuing requirements, no MasterCard credit or debit card will have mag stripes by 2033. So MasterCard is getting rid of the magnetic stripes, which means you'll have to figure out how to pay if your chip decides that it doesn't want to work, like it has for me multiple times, and I had to use a stripe as a backup. And I guess you just have to use a different card or something, or they'll have to figure it out. Next. CNBC when the futures turn slightly red. Absolutely. That's them all the time. Markets crashing. Markets up though, except for the NASDAQ. Next. Nancy Pelosi urged to amend harmful cryptocurrency provision in the infrastructure bill. So the Senate passed this, and now representatives in the House are trying to get Nancy Pelosi to change the provision. U.S. Representative Anna Eshoo has asked House Speaker Nancy Pelosi to amend the crypto provision in the $1.2 trillion infrastructure bill that the Senate passed this week. She urged the House to adopt the bipartisan amendment supported by the Treasury Department that provides a solution. Continue. Congresswoman Anna Eshoo from California announced Thursday that she is fighting to fix potentially harmful language on cryptocurrency in bipartisan infrastructure bill. Eshoo wrote a letter to the House Speaker Nancy Pelosi to express concerns regarding the tax reporting requirement for cryptocurrency brokers in the Infrastructure Investment and Jobs Act. The bipartisan infrastructure legislation recently passed by the Senate. The legislation uses a broad definition of broker that would encompass miners, validators, and developers of wallets who are unable to comply with reporting requirements. Many people have criticized the crypto provision in the bill, with Senator Patrick Toomey calling it unworkable. Senator Ted Cruz said the infrastructure bill has hit it a portion that it was designed to obliterate crypto. That would be a tragic mistake. Some have warned that if this law is adopted, it will drive innovation overseas. Next. Diddy Taihutu discussing hiding his cold storage wallet after selling everything for Bitcoin 3 years ago. I saw this, and so I looked this guy up, and it's interesting. He sold literally everything 3 years ago when Bitcoin was trading at around $900 and went all in on Bitcoin. Everything that every financial advisor in the world will tell you not to do, he did. Let's see the article. Over 3 years ago, a Netherlands native made headlines when he told the world that he and his minimalist family sold everything for Bitcoin. At that time, Didi Taihutu and his family sold their home, valuables, and vehicles in order to accumulate the digital asset. Taihutu has recently discussed how things have been after 3 years, explaining that 74% of his crypto holdings are currently held in cold storage, which is like a USB drive or something like that. Continue. Didi Taihutu and his family are doing quite well in 21, living like digital nomads and hidden hardware wallets all over the world, according to a recent interview with CNBC. Bitcoin.com news reported on the Taihutu family on October 10th, 2017, as Didi Taihutu told the press he and his wife sold everything for Bitcoin. In his latest interview, Taihutu told CNBC that the family safeguards a total of 6 hardware wallets hidden across several nations. Continue. I've hidden the hardware wallets across several countries so that I never have to fly very far if I need to access my cold wallet in order to jump out of the market, Taihutu remarked during the interview. The Bitcoin family man explained 2 positions are in Europe, 2 are in Asia, and a single wallet is kept in South America, and the last hardware wallet is stored in Australia. However, 26% of Taihutu's crypto stash is in hot wallets, while the remaining 74% is stored using cold storage solutions. I prefer to live in a decentralized world where I have the responsibility to protect my capital. The family owns Litecoin, Bitcoin, and Ethereum. So there you have it, the ultimate decentralized man, I guess. Continue. Broke graphic designers after drawing a rock on Microsoft Paint and selling it as an NFT for $200,000. There you have it, 75 Ether for a rock drawn on Microsoft Paint. Next. My recovering portfolio, new crypto bill. Next. That's it for today. And the Dow Jones just went negative. S&P 500 is still up. So today, what we're going to do is we're going to take a look at the S&P 500. And whoever in the comments hits the closing of the S&P 500 on the nose will get a... What do you think, Nick? If you hit it right on the nose, $100 gift card. $100 gift card. Yes, okay. So $100 gift card and check the market mug. If you in the comment hit it directly on the nose, where the S&P 500 is going to close this afternoon at 4 p.m. And a $100 gift card too will contact you. So if you want Starbucks, Dunkin', whatever you want. So go ahead and put it in the comments where you think the S&P 500 is going to close. And we'll go through the comments and see who won on this afternoon. And let's go through the low, medium, and high for today. Low, VUG, the Vanguard Growth Index Fund, measures the investment return of large cap growth stocks. It tracks the performance of the CRSP US Large Cap Growth Index, another index fund. It has a small dividend yield. These last 3 low-risk stocks are for people who want to invest and just set it and forget it. There have been people who that has worked for beautifully in the past. So most of the time they retire with money, with more money than average day trader. But they also dollar cost average into investments like this. So that's the low one for today. The medium is ARKQ. ARK Autonomous Technology and Robotics ETF. So that's one from ARK Investments with Kathy Wood. The investment seeks long-term growth of capital. The fund is an actively managed ETF that will invest in primarily domestic and foreign equity securities of autonomous technology and robotics companies that are relevant to the fund's investment theme of disruptive innovation. Has had over 24% return since its inception in September of 2014. has a great buy rating from many analysts and a 4-star Morningstar rating. This could be a good long-term investment for the next decade as robotics and automation continue to increase. It's high risk. If there's a broader pullback in the market, tech stocks usually get hit pretty hard. The S&P is at 4462 right now. So what do you think it's going to close at? So we have 4464.17 by Lanier. So by the end of the market today, what do you think the S&P 500 is going to close at? And the high risk for today is SAVA, Cassava Sciences. Cassava Sciences, formerly Pain Therapeutics, is a clinical stage biotechnology company. The company is focused on early detection and treatment of neurodegenerative diseases such as Alzheimer's. It is developing a drug that will detect Alzheimer's disease with a blood test. The company has had some wild swings recently and is a little too expensive for my taste right now. I'll wait until there's another pullback, but I put this one on my watch list. It was up this year from a low of $2.78 all the way to $123. So that's a huge return. If this company is successful in its endeavors and gets FDA approval for its drugs, that could be a game changer, and the stock would soar for sure. So you can add it to your watch list, research it. Fundamentals aren't that good, and it's still in the clinical R&D stage. So at this point, it's pure speculation, but they are in their clinical trials. So make sure you research it and see if that's something that you would like to invest in. So we got 44.23, 43.70, 44.62.53, 45.22, 44.65. All right, we'll see this afternoon where it closes at 4 p.m. It's right now at 44.63.37. So we'll see. All right, and if you would like to make an investment today in Revival Today and the Kingdom of God, I guarantee you that personally, my returns have never been greater than when I invest in the Kingdom of God, when I invest in ministries in good soil like Revival Today. So if you'd like to do that, you can do that by donating on Facebook, #donate. You can text RT to 50155. You can do Cash App, $RT Give, Venmo at RT Give, revivaltoday.com/PayPal. We're also accepting cryptocurrency. So you can scan that code right there, and it'll give you a choice of different cryptocurrencies that you can give. If they're not on there, you can call 412-446-2332. Or you can send it by mail to Revival Today, P.O. Box 7, Prosperity, PA 15329. And then we're going to give away... we'll do the shirts. We'll give away the shirt. Check the market shirt so you can represent. Check the market. Make sure you claim your offer at revivaltoday.com/claim your offer. Or hit the claim your offer button. And everybody that gave this week and claimed their offer, I'm going to go ahead and enter them into a drawing for this right here. This stock certificate for Pan American Airways from 1965 that you can hang up and show everybody that you're into stonks. It's a great conversation piece. You can take the family picture down off the mantle above your fireplace and put this up. It's a great conversation piece. All right, let's get in some of the 100 is going to close this afternoon. And Evangelist Jonathan is in Hobbs, New Mexico for one more night. Let's see the advertisement for that. You got it? There we go. Choose Life Church, Hobbs, New Mexico at 7 p.m. And then in Apopka, Florida, at Word of Life Church on Vic Road, Friday, Saturday, 7 p.m., and Sunday, 10:30 a.m. and 6 p.m. Make sure you make it out to those meetings if you're anywhere in that vicinity, or if you're not, they created airplanes, so you can fly wherever in the U.S. Awesome. All right, we'll take a look at where everybody guessed it will close at the end of the day. And see who the winner is. We'll announce it on Monday. All right, everyone. Have a great weekend. Have a blessed weekend. And I will see you all on Monday. See ya.